Hey everyone, welcome back to Corporate Decoder. Today, Chiron Real Estate Incorporated. Ticker XRN just filed an 8K reporting the completion of a major asset sale, and there is a significant shift in their business structure that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing tells a story of Chiron shedding a large chunk of its physical property to focus on becoming a joint venture partner, and it is a big move for a company of its size. Alright, let's dive into what Chiron Real Estate Incorporated dropped on us on the 2nd of July 2026. This filing in 8K is basically a heads up for big news that isn't on a regular schedule. The key event here is the completion of a sale that is pretty substantial for a company with only 30 employees and a market cap around $26. Back on the 26th of June, Chiron agreed to sell a big chunk of its real estate holdings. We're talking about 7 large inpatient rehabilitation hospital properties. Think of these as the buildings where healthcare happens. Located across 5 different states in the US, the price tag for this massive sale was a cool $217 million. This was no small transaction, and it definitely changes the game for Chiron. Now, this isn't just about selling buildings. The real story is what happens after the sale. The filing states that following the closing, these properties are now owned by a joint venture. Chiron, or one of its affiliates, will hold a 15% stake in this joint venture, and a US public pension fund will hold the remaining 85%. Chiron will also be the managing member, meaning they'll still have a hand in running things, even if it is a minority ownership. This looks like a strategic pivot, moving from being a direct owner of many properties to a more selective, partnership-driven approach. This is a common strategy for real estate investment trusts or REITs, and it can free up capital for other investments or reduce debt. The actual sale wrapped up on the 29th of June, just a few days after the agreement was made. So the deal is done, and the $217 million has or will be transferred. This action demonstrates Chiron's ability to execute large-scale transactions efficiently. While the 8K itself doesn't provide detailed financials, it does refer to pro forma financial information. This is essentially an as-if look at the company's finances, showing what things would have looked like if this sale had already happened. This pro forma information, which is attached as an exhibit, gives us a glimpse into the financial impact of this substantial divestiture. Pro forma statements help investors understand the potential future financial position and performance of the company after major events like this sale. It helps to see how the balance sheet might look with the cash from the sale and the reduced property assets. Similarly, the pro forma statement of operations shows how the company's income and expenses might have looked. We would expect to see a reduction in rental income from these properties, but also a reduction in associated operating expenses, and potentially interest expense if debt related to these properties is paid off. This helps paint a picture of the company's ongoing profitability and operational efficiency post-sale. 10.1 Agreement of Purchase and Sale, dated as of the 26th of June 2026. By and among certain subsidiaries of Chiron Real Estate Inc. As sellers, the buyer's party thereto, and Chiron Real Estate LP, solely for the limited purposes set forth therein. The actual purchase agreement is filed as an exhibit, which is Exhibit 10.1. This document would contain all the nitty-gritty details of the sale agreement, including any specific conditions, representations, and warranties. While we don't have time to go deep into that legal document, knowing it exists is important for transparency. Unaudited pro forma consolidated financial statements, and Exhibit 99.1 is where you'll find that important unaudited pro forma financial information that I just mentioned. This is crucial for understanding the financial picture after the transaction. By Sums and Jamie A. Barber, Secretary and General Counsel date, the 2nd of July 2026. Finally, we have the signatures confirming that this report is officially submitted by Chiron Real Estate Incorporated, signed off by Jamie A. Barber, the Secretary and General Counsel. This ensures the authenticity and official nature of the filing. Now, looking at this move more broadly, Chiron Real Estate Inc., which is in the healthcare facilities sector, seems to be repositioning itself, selling off properties and taking a minority stake in a joint venture with a large pension fund suggests a move towards capital-light strategies. This can reduce risk and allow the company to focus on management and development rather than day-to-day property ownership. On the flip side, it also means giving up significant ownership and potential future appreciation of those specific assets. The risk here is if the joint venture doesn't perform as expected, or if Chiron's management fees and stake don't compensate for the loss of direct control and profit from full ownership. It is a strategic shift that will require careful execution and constant monitoring of the joint venture's performance. For a company of Chiron's size, Shedding $217 million in assets is a major undertaking and signals a significant change in their operational model. I will be watching to see how they deploy the capital received from this sale and how their new joint venture strategy plays out in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. Remember to check out the Discord link in the description for more community discussion.